So welcome to Rand Score C morning briefing for Thursday, the 11th of June 2009. Just taking a quick look around the markets, just gone 8:30 now here in London, and so far we've pretty much taken off where we finished in the US close yesterday, with stocks marginally lower and with fixed income very much attention on the yield curve, having seen that near touch on 4% in the US 10-year yesterday. Just taking a look firstly then, moving into the overnight news, starting with Asia. In Japan, they had their Q1 final GDP annualized figure come out at a contraction of minus 14.2%, the steepest contraction they've seen since the Second World War. However, the minus 14.2 print isn't quite as bad as analysts were expecting at a minus 15% expectation. Taking a look then, obviously, with that near 4% touch in the yields yesterday and the steep fall in USTs, two of the main things there was that incoming supply in that 10-year note auction, and also his comments from Russian Foreign Ministry, who said they could be looking at moving out of USTs and into IMF bonds. Overnight, commentary now coming out of China, however, a little bit more positive for the US. China has no choice but to keep buying US Treasuries, as according to the chairman of China's National Social Security Fund. Looking elsewhere, for those who weren't around, the Fed's Beige Book, as a highlight, they said that the economy remained weak or deteriorated. The Fed, though, does see signs slump moderating in 5 of the 12 Fed districts. Taking a look in other news out of Europe, a few ECB pieces, most notably from the Telegraph this morning, saying that ECB fears another banking crisis in 2010 if the recession drags on, as according to the ECB's financial stability expert. And overnight as well, just so you're aware, the Reserve Bank of New Zealand, they had their interest rate decision. They decided to keep rates at record lows at 2.5%, as expected. Most notably, they said for the Kiwi, they warned that the recent rise in the New Zealand dollar could stifle fledgling signs of an economic recovery that are now showing through, but said that any direct moves into the currency would have little effect. Taking a look elsewhere this morning, you've already seen a pertinent US commentator, Nouriel Roubini, saying that US growth rate of 1% next year he forecasts, and says that US unemployment peaking next year at least 11%. The UK markets, obviously, gilt futures are underperforming at the moment, playing somewhat catch up with the down moves in Treasuries and Bund futures late yesterday evening. We have already seen the UK 10-year gilt yield hit its highest since November of 2008, again just shy of that 4% mark. Most of the UK papers, they're paying note to the NISA report we saw late yesterday afternoon, which did signal the recession is over, according to that pertinent think tank, reporting growth in both April and May. So taking a quick look at the calendar, just coming up then to 9 o'clock, we're going to be looking out for the ECB to publish their June monthly report. We'll see whether that echoes the most recent ECB press conference and Jean-Claude Trichet. And then we'll also look out for the IA monthly all report. For the US figures today, we're going to be looking at the jobs market, initial jobless continuing claims, and then focus will be on the May advanced retail sales report, where analysts are expecting an improvement in May up to 0.5% consensus against the minus 0.4% we saw last month. Elsewhere as well this morning, we still have around €9 billion worth of supply to come in Italy in the form of BTPs, and then we'll see a 30-year note auction in the US later on this evening.